Let's talk about renovation mortgages. Hey, it's Kristi. Thanks so much for being here with me for another video. You may have heard the term of a renovation loan or renovation mortgage, and I want to share with you some of the details. There's a lot of pros, there's a couple of cons, and I just want to make sure that you have a nice overview of what this loan program looks like. So HGTV has brainwashed us that every home should look shiny and new and custom to you. Well, if you're in the home shopping market right now, you might find that some homes have not been touched in decades. From the popcorn ceilings to the shag carpets, everything needs to be redone. But let's say you only have the cash to close as far as your down payment and your closing costs. You certainly don't want to put those kinds of costs on credit cards or take out an additional loan at a higher interest rate if it's unsecured. So the best way to do that is through a renovation mortgage. What this does is it provides the purchase price amount and also a set aside for the renovations that you state that you're going to do. So it's got a loan to value based off of the after repair or after renovation value. So let's use a simple example. Let's say you're buying a home as is for $200,000. And you're going to put about $50,000 into the home, but when it's all said and done, it's going to have a value of about $300,000. So we're going to base the loan to value off of that $300,000. And in many cases, you can come to the closing table with a smaller amount of money out of pocket in relation to a percentage of what's required for your down payment. This allows the seller to get their whole $200,000 that they've agreed to sell the property to you, and it puts aside that $50,000 so you can redo the roof, update that kitchen, redo the floors, knock out a wall to make it an open concept room, whatever your goals are. Now, some of the loans have some restrictions, and so it depends on if you're going with an FHA or a conventional. The FHA loan is referred to as a 203K, and that is the section in the FHA handbook regarding the renovation mortgage. So that's why it comes up with the title of a 203K. That's where it's found in that section of the guidelines. This allows money to be set aside, and everything has to go through a general contractor, a licensed and insured general contractor. This person also can't be family. And what this GC is going to do is list out what's called a bid sheet, and it's going to break down all of the renovations that you intend on doing to this home and the costs broken out in material and in labor. So knowing what those products are that are going in, granite countertops, all wood kitchen cabinets, those kinds of things will help the appraiser understand what the after renovation value is, and that's what the loan will be based off as far as the loan to value or LTV. Now let's talk about pros and cons. Pros, everything can be shiny and new up to that dollar amount where A, you're comfortable, and B, it's not an over improvement for that neighborhood or for that home. So in other words, you don't want to be the fanciest house in the neighborhood. So ideally, you'd love to find the crappiest house on the block and make it more equivalent to those nicer homes. And then you're going to have automatic equity that way. But let's just say, it's a little bit dilapidated. Maybe somebody had lived in it and just didn't have the funds or the means to be able to upkeep it. So it's a lot of maintenance that needs to be done, and perhaps it just hasn't been updated in a few decades. Maybe nothing wrong with it, physically speaking, as far as the safety and the stability of that as being your house. You just want to make it custom and pretty. So the GC is going to list out exactly what's going to happen as far as the renovations in the home, and then we're going to set up the loan to value based off of that amount. So that $50,000 in this example that's going to go towards renovating your home will be paid in draws to the general contractor. The general contractor will take that money and pay his or her subcontractors. So everything goes through one W-9, and your general contractor will understand what that means. They've also got to show their license is in good standing and current. They've also got to provide some insurance information to the lender in order to get approval. Although everything goes through a general contractor, that doesn't mean that you can't hang your own doors or paint your own trim or something along those lines. There's some things that you'll be able to contribute to that are like that cosmetic part of it, but if you're knocking out walls and you're gutting a kitchen, all of that has to be part of what your general contractor provides for you. So let's go back to those draws. In most cases, it's either 3 draws or 5 draws. and there's a cost every time there is a draw involved. Title work gets updated because a lot of times contractors will put what's called a mechanics lien against your property, and that mechanics lien needs to get satisfied once they are paid. So we want to update those mechanics liens to go away and be satisfied, and then we also don't want a general contractor to get all of the money at one time. Not like $50,000 is enough to run off to some, Caribbean country and say adios to everybody. But we want to make sure that you, as the client of that general contractor, are satisfied with the workmanship and with the end result as you had agreed from the very start. So you get to design a room or design the whole home the way you want to, as long as it's inside of those parameters, that it's not an over improvement. You get to choose the material and the colors and everything to make it custom to you so that you love the end result. The worst thing I see happen is that somebody buys a home and resents this tiny kitchen or this wall between, these two rooms that we're not really sure why it's there. So why not have the funds to knock that out, start the way you want to see it done, and make it custom to your taste? Okay, so let's talk about the cons of this loan. Typically, it is a higher interest rate than just a typical 30-year purchase mortgage interest rate. But you're getting a lot of benefits out of it too, so you got to pay for it. Next, there are costs involved. So I'd mentioned that every time you have a draw, there are costs. The title gets updated, and also there's a cost in going out and making sure the work that has been claimed to be done is done. So a HUD consultant will go out in most cases. There are a couple of exclusions to that. I'll talk about that in just a moment. And they'll make sure that that work is done and essentially update a report that shows that it's done. They'll also check with you, making sure you're satisfied, and then the lender will release that portion of the draw to the general contractor so they can move on to the next phase of your renovation. Also, in addition to the higher interest rate and the higher fees, there are some restrictions as far as what can be done. In other words, if you are going with an FHA streamlined, we're capped at $35,000 worth of renovations total, and it can't be anything structural. So if you're removing a structural wall between, say, a kitchen and a living room, that won't fly for the FHA streamline. What I like about the streamline is there's not a HUD consultant involved, and it's really for more simple cosmetic updates. So maybe you're just doing the floors and replacing the cabinets and the countertops and maybe the sink in your kitchen. That would be a really great way to do an FHA streamline. If you're not going to go with an FHA, a conventional mortgage will often require a HUD consultant. It is a third party. They are licensed. They are on a list that your lender will be able to go to find. They are kind of far and few between in some communities, so you might have to bring somebody in from another community. I've seen the costs in a HUD consultant range from $500 to $1,500, but in the most cases, I see it somewhere between $800 and $1,000 for their work from start to finish. And I promise you, they are doing a lot of work. They're consulting with you as far as the renovations. They're also ensuring that the work gets done properly, the payment gets paid properly and in a timely fashion, because your general contractor may not move on to that next phase until they receive money. So you want that person to be that go-between from you and the lender, because once your loan is originated, that loan officer is really out of the picture and doesn't have much influence on that renovation department's way of doing business. But the HUD consultant certainly does. A renovation loan can replace the roof. In some loan programs, can add a pool. It can add a fencing, replace the flooring. It can knock out walls, and it can just change a poor home design into something that's got the kind of flow that's more acceptable in today's trends and tastes. And one of the last things I want to make sure that you know is that there is something that's called a reserve contingency. You've seen the shows, they knock through the wall and all of a sudden something happens. They hit a plumbing line. It turns out the electrical is outdated and not to code. Whatever the case is, stuff happens, and there's usually additional costs in addition to what you thought you were going to be paying for that renovation. So that is why a reserve contingency exists. What this is 10% of a holdback of the renovation portion of your loan. So let's go back to that original loan. We've got that $200,000 for the purchase. You've got the $50,000 for the renovation. The 10% holdback is going to be based off of that $50,000 renovation portion. So we're going to hold or set back $5,000 in case something goes wrong. If you don't touch it at all, if it's not necessary at all, what's going to happen is it's just going to apply to your principal pay down. So you're not actually really borrowing it. Your loan will be reduced by that dollar amount. But if you do need it, that money is there, and the general contractor doesn't have to call you and say, hey guys, sorry, we need an additional $2,500 because such and such just happened. You've seen some of those shows where they make that phone call, and Joanne hated making that phone call. So making sure that you know that that measure is there to protect you. So as long as you know that the renovation loan is a higher interest rate, there's some additional costs, and there's that reserve setback, it might be the best way to get a really great home in an established neighborhood where you want to live, to be shiny and new and custom for you. And so if this sounds like something that you are interested in, call your loan officer. And if it's not me because you live in another state, just make sure you ask for a renovation loan and ask about the pros and cons and what might be the best fit for you, if it's FHA or if it's conventional. And guess what, you guys? VA even has a renovation loan. Although those don't happen as often as an FHA or a conventional, I want to make sure you know they exist. Hey, thanks so much for being here with me for another video. And until next time, my friends, stay well.